Today's edition of Market Talk is brought to you in part by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Friday, July 30th. Great to have you here with us. Thanks for making us part of your day. I'm your host, Jesse Allen. Thank you so much for joining us here today. MarketTalkAg.com is our home on the web. That's where you can find us. MarketTalkAg.com. All of our great sources there, our social media links, all of our streaming sources, our radio affiliates, news, market information. It's all online. MarketTalkAg.com. As we wrap up the month of July, a bit of a down day in the market trade here on Friday. Let's talk about all of it. Let's bring in our buddy Ted Seifried with Zaner Ag Hedge. Ted, great to have you on Market Talk. How are you, sir?
I'm doing great, Jesse. Thanks for having me. It's Friday. Yay.
Yeah, it is Friday. We are at the end of the week, which is always a good thing. And end of the month, though, maybe not a good thing for this market trade. I'm not too terribly surprised that we're seeing a little bit of pressure in these markets today just with the end of the month. That seems fairly typical to get a little technical pressure throughout the grains and livestock sector here as we wrap up July.
Yeah, it is usually very typical to see that happen at the end of the month. But, you've got a couple other things going on. I mean, we're turning the calendar on July into August, and this is really when we are very, very, very closely watching weather, specifically for soybeans. Certainly it has an impact on corn as well, but soybean pod set that's the all important time of the year for soybeans. And when you have a weather forecast that, ever since midday Tuesday has been kind of hinting at the possibility of some rain in the 8 to 14 day forecast. Now it kind of came out, and then sort of came back in again. And that started to put a bit of pressure on us in the night session, Thursday night into Friday morning. And then we really kind of ran with that a little bit more. And then on top of all of that, a lot of the strength that we had been seeing this week, despite the rains kind of popping in the forecast, is really the weakness that we had seen earlier in the week in the dollar. But there, Friday morning, that dollar started to come back pretty healthily, taking back a good amount of the losses from Wednesday and Thursday. So that strength in the dollar kind of leans on commodities as a whole. And all these things coming together at the end of the month when you have guys that your big investors wanting to take profits or walk away from risk or rebalance their portfolios on assets that maybe haven't been performing as well as others in the last month or so. It kind of just spelled a bit of a bigger down day, especially for soybeans. And it's been interesting because corn and wheat in particular have really tried to have some nice bounces throughout the day. But as soon as they do, the soybeans go and challenge lows and bring everything back down. So it's the soybeans that are the party pooper, the wet blanket here today, so to speak. And I don't know. I'm very interested to see what happens Sunday night into Monday. A lot of that's going to depend on what that weather forecast is saying, and if the confidence of the rain is building or if it's falling back out again.
Well, before we talk more about weather and dive deeper, I want to stay on that outside market train a little bit, that dollar. And I know the stock market making some record highs here this week. Talk about that and talk about your thoughts on this outside market pressures or, beneficial, moves in the outside markets for the ags here as we move into August. It seems like, a lot of times we tend to forget about the dollar's impact on commodities with some folks, but it's very, very important. And as you alluded to, it's been shown here this week, very much so, just with the weakness in the dollar benefiting grains.
Yeah, absolutely. I think that is definitely something that people tend to forget about, is that, the relative strength in the US dollar has a huge impact on the value of commodities as well as our exports. And so it's like sort of a double whammy for our exportable commodities. And in particular, when we look at agriculture, I mean, wow, soybeans, wheat, cattle, hogs, right? Obviously corn too. So when you have the dollar, which over the course of the past month and a half had really bounced off the lows, the inflationary ideas or sort of fever had kind of been behind us for a little while. But then you have, the Fed talking and Jerome Powell saying, the Fed's going to keep the pedal to the metal, right? We're going to continue to stimulate the market. So that kind of brings back some of those inflationary fears. It brings back, well, also, all the talk in Washington right now, we're trying to get more spending bills. They're talking about paying unvaccinated people $100 to get vaccinated. I mean, throw money at the problem, right? And when we're doing that, when we're just throwing money at a problem, which I'm not sure we have, but when we're throwing money at a problem, it just creates inflation. So the inflationary talk has come back. If the dollar continues to break, it will get stronger and stronger, and then you will see your institutional investors, your funds, so to speak, come running back into commodities because they are looking to hedge that inflation. In particular, they'll look for commodities that have that double exposure to the dollar, like we talked about, exportable commodities. And also they'll look at commodities that have positive charts and positive fundamental backdrops. And there's a lot of things in agriculture that I think do. So, yeah, I mean, if that dollar continues to weaken, we can have some days and weeks in here where we're rallying and we're not exactly sure why, right? I mean, it's just money flow that will come back into the commodity markets. So I kind of think that will continue, but I also kind of think we'll be contending with our seasonality to want to go lower in the grains. We almost always put our highs in July or August for corn, and July, August, or very early September for soybeans. And we almost always feel like things are worse than they actually are, or better than they actually are. And I don't know if this is a situation where, we've been talking all year about, crop damages and drought and how that's going to negatively affect our corn and soybean crops and so on and so forth. And maybe it wasn't a perfect growing year, but I don't know. I'm feeling like maybe it's not as bad as what some people have made it out to be. I honestly think that we're going to end up with a pretty darn good corn crop. Soybeans is still a bit of a question mark because we need to see what the weather's like for the next 3 weeks or so. But I'm going out on crop tour in 3 weeks. I'm very curious to see what I'm going to see, but I'm not expecting to see a complete disaster. I'm going on the west, so I know I will see some bad stuff, specifically in, like, say, South Dakota. We don't go through North Dakota. I will go through North Dakota the week before. I know I'll see some not great stuff, but around me here in Northern Illinois, I don't have to go far to find some really good looking corn and decent looking soybeans right now.
Well, and you mentioned crop tours, and we're starting to get a few private crop tours going on across the country. And I think they're echoing what you were just saying, is that there are bad spots, yes, but there are also spots that maybe weren't as bad as we thought. Now, the Wheat Quality Council just sent their spring wheat tour this week in North Dakota. Obviously, those yields not very good, but we pretty much already knew the spring wheat crop was in trouble. But I talked to Dave Green with the Wheat Quality Council, and he mentioned to me, he's like, I was surprised with some of the good spots in that spring wheat crop. And I know, although overall some of the worry about what's going on there is causing more worry for our quartered soybean crops in that northwestern corn belt. And as you mentioned, you're getting ready to go on a crop tour here in a few weeks in kind of the western areas. And I'm with you. I think the next couple of weeks, it seems like our market's really kind of shaping up. Quarter beans have been trading in this kind of sideways range a little bit, trying to figure out what weather's going to do. And once we start getting some of this data in the next couple of weeks, I think that's really going to shape where our market trade goes as we get into the fall. Would you agree with that?
Yeah, I mean, so Jesse, there's two parts to the balance sheet, right? There's production, and we've been talking about that since we got planting and acreage intentions, and then planted acreage, and weather watching. I mean, it's what we do, right? But this is right around the time of the year where we start to get a little bit more confident and comfortable with what crop we have out there, and then we kind of just think about, oh, well, what about demand, right? And we've been just kind of taking the USDA's balance sheet, the demand side of their balance sheet, for granted, right? But it's becoming a bit concerning for the lack of export sales that we have, specifically for new crop soybeans. But I'm going to argue for corn as well. And at some point, we have to say, well, we gotta see that demand happen. Otherwise, it really doesn't matter if we lose a couple bushels an acre off a trend line yield, because the demand's not there. Then the balance sheets won't be nearly as tight as what we were thinking they were going to be, and so on and so forth. So at some point we need to find that demand, and I feel like there's two ways to do that. If you have weather concern and you have a big breakout to the upside in soybeans in particular, China will be forced to come and buy, because they'll be sitting there. They'll buy out of fear that prices are going higher and that stocks are going lower. The other motivator is greed, right? And they want to buy at cheaper prices. And if they're not forced into buying out of fear, then they will buy out of greed, and that will be okay. How big of a break do we need to see in the market for the Chinese to come in and buy 10, 15 million metric tons of soybeans, right? And personally, I think that's somewhere in like the 1180 to 1240 range. I wouldn't be surprised if that's where we see our quote unquote harvest lows for soybeans. For corn, I'm looking more in like the 510 to 480 range. I've been on record since April saying that I think we'll see a harvest low in corn, December corn, at 480. I've kind of raised that number a little bit based on the dryness for the second season spread corn crop, followed by frost, and then another frost, and then another frost. So I think the floor is a little bit higher in corn than what I was originally thinking, although I still wouldn't be shocked with 480. But yeah, at some point we might have to go on what I've been calling a demand hunting expedition, so that we can prove that demand is there. Once we do that, though, Jesse, then we have more upside potential, because I do think that we're going to see national average yields that are at the very best at trend line, if not a little bit lower. So when we look at the USDA's balance sheets, and again, I do think that demand is ultimately there. We just got to find it. But I look at the USDA balance sheets, I think they could be maybe slightly tighter than what we're looking at right now. And to me, that justifies higher prices. So unless we get a big weather rally happening here and now, like in the very short order or near future, again, at some point we have to go find that demand. We put in our harvest lows, but then I see the roadmap being, higher prices, a nice harvest rally into the end of the calendar year, and then probably into spring as well. Some of that depends on what's happening in South America, but probably into spring and into planting again. So the lower we go here, if we are in fact going to go down, the higher I think we can go later on, because we'll find a little bit more demand. But again, they can be motivated to buy right now here too. If we, walk in Monday and it's just hot and dry for as far as the eye can see, that all the rain falls out, and they say, oh boy, we need to buy now before beans get to $16. So it can happen one of two ways. I'm leaning more towards the demand hunting expedition, lower prices. But in the long run, I'm still really rather bullish. And I would welcome the buying opportunity down at those prices, just like I know China would too.
Well, now you mentioned some of those price thoughts for harvest lows and whatnot, and I'm curious. Then, do you think right now would be a good time to maybe do some hedging in corn or beans or wheat? Should we be looking to lock in some floors? I know some puts have cheapened up with volatility lessening a little bit.
Yep.
Should we be looking at maybe locking in some floors in case we dip down to some of those lows, or is it more of a hey, let's wait and see what happens the next couple of weeks kind of mentality?
I still think the timing is there and the pricing is there to say, hey, we can go in and sell cash, HTA, sell the board, however you want to do your marketing, but however you want to sell your cash. I still think we're in a position where you can sell cash and then, the ownership with calls in case we do get that big weather push, through the month of August. But also, Jesse, I've been urging guys to be 60, 65% sold where they can be. Again, my North and South Dakota guys, Minnesota guys are saying, well, Ted, I can't do that. So we've had to look at other things. Like you said, as we not only has volatility come out, but, we've shaved a lot of time value off of the December corn puts, for example, November bean puts. So, yeah, these are now viable options. And now we're shifting over to that a little bit more than the let's sell cash and then use the call options for our re-ownership, for our opportunity. Now we're moving closer to, hey, we can just buy puts for whatever we haven't gotten sold. But, I'm hoping that my guys listen to me, you never really know. But I'm hoping most of my guys are 65% sold here already. And if you're not there, then yeah, I think you need to be looking at different strategies. And again, I think there's a number of different strategies you can use right now. But the one that is sort of coming into play and coming into focus that wasn't really available or feasible or cost effective, let's go with, before it was buying those put options. But now we are in a position where yeah, I think you can do that. There might only be a short window though, because let's say we come in on Monday and we do start to break out to the downside. The volatility premium in those put options will go through the roof, and we will skew towards the puts rather than we have been skewing towards the calls really all summer so far. So it's one of those things that if you're thinking about doing it, might be timing might be now, here and now, right?
Very, very true. Ted, let's talk livestock. I want to make sure we have time for that today. Cattle and hogs on Friday showing some weakness once again. I know on the cattle side, feedlot country, they've been holding out for some higher prices. Not really getting it, maybe a buck higher here and there, but just not getting it. What are your thoughts on this cattle market as we wrap up the month of July and head into August?
Yeah, Jesse, we're literally stuck in the mud and have been since the beginning of the calendar year, basically. Cash won't move. I think guys like myself and producers for sure have ideas on why the market should be going higher. You look at domestic demand; it is really very good. We've actually strung together a pretty decent chain of export sales weeks too, which is great. Um, for feeder cattle, obviously the holdback there is higher corn prices, but even corn prices have been showing kind of signs of weakness. I mean, we just talked about all that. So yeah, live cattle, I really think that there's a lot of justification for live cattle to go higher, especially when I look a little bit further out in time, because then I say, if we do get that hotter, drier August, weights might become an issue. And I'm not sure we have quite as many animals out there as, well, I don't know. Either way, strong demand. I don't think we're oversupplied. I really do think that there's upside potential, fundamentally speaking. But if we can't get cash to go higher, we try with the futures to push everything up and whatever, but then the cash doesn't, and so that comes and knocks us back down. So now we're just kind of stuck in this range for now. And we can go on and on about why that is and why the cash is stuck there. I think yeah, I don't think it's fair. I really don't feel like price discovery is as good as it should be in the cash market. That's about the nicest way I can say it. Um, but until something happens on the cash side of things, I mean, we're just kind of stuck there. Hogs is a much more interesting market. There's a lot more going on there, and obviously earlier this week with ASF in the Dominican. Wow, that's really close to home.
Mhm.
And so we were limit down October hogs on that on Wednesday. We tried to have a really nice bounce and take a lot of those losses back on Thursday, but we did not close well. So Friday, we knew we were going to be under pressure. The question really was, how bad is it going to be? Maybe not as bad as we were thinking. I mean, we did kind of hold trend line. It could have been a worse day. It wasn't a great day, but it could have been worse. So I'm very curious to see where we go. And it's so hard to kind of dig through or wrap your mind around, ASF in Western Hemisphere, so close to home. Is it coming here? I mean, that's obviously got to be the fear of the market. But also ASF spreading could mean more demand for us too. Um, I would like to think that the U.S. is really one of the best countries in the world as far as security and keeping things like this out. Uh, but man, it's a scary thought, and you understand why the hog market has been really rattled by that here this week. So it'll be interesting to see how the dust settles and what our overall feelings are next week after we've kind of removed ourselves from the situation a little bit. I'd like to say I'm fundamentally bullish, especially when I go out to the October contract. I think it could be trading close to where the August contract is now, and that's $20 higher. But again, that's saying as long as we don't have ASF in this country. And I feel like that October contract is saying, well, that's right about the amount of time that it could take for that to get here. So yeah, it's a tough cookie right now. I want to be bullish hogs, but again, you got to be a little bit more nervous about that today than you were a week ago.
I definitely agree with that. We'll have to be watching that very, very closely. Ted, any other final thoughts you have for us or anything you want to reiterate real quick before we run out of time today?
I mean, the one thing that I want to talk about is the crude oil market. We had a nice break on that. Guys ask me all the time about whether they should or when they should be hedging or pricing their energy needs for the coming year. Crude looks good to me. I think there's more upside potential. And I know we're talking about a lot of mask mandates coming back, and some people think are afraid of lockdowns. I don't feel like. Well, I'm not going to say it's not going to happen. I just don't think we're going to stop driving. I'm not sure we're going to listen to lockdowns if they were to happen again. I think that crude chart looks really good. So I think guys should be pricing some energies. I think there's some opportunities to use call options and things like that on the board to maybe hedge the upside. But yeah, I'm interested in that crude market right now. It had a really nice little correction, and I'm going to call it a bull market correction because we've had a nice bounce off of it. And to me, that chart looks good to the upside.
Well, Ted, I know producers need a little advice, need some help with their marketing needs. You and the folks there, Zaner Ag Hedge, can help them out, and I'm sure it's just as easy as a phone call or checking you guys out online, isn't it?
Yeah, absolutely. I mean, you can reach me directly at 312-277-0113. Aside from that, you can find us on the web at www.zaner, that's ZANER.com. You can read a bit about us. You can sign up for our morning Ag Hedge newsletter. You can also find me on Twitter. I'm at the Ted Spread. I like to talk about whether hot dogs or sandwiches or not, which, by the way, they are. I like cars. In particular, I like cars that run fast cars that run on E85. And I like to talk a lot about ethanol and certainly the markets as well.
I will echo that. Your Twitter is very entertaining. At the Ted Spread on Twitter. Ted Seifried with Zaner Ag Hedge. Thanks for joining us here today on Market Talk, my friend. Have a great weekend. We'll talk to you again soon.
Hey, Jesse, thanks for having me on, man. You have a great weekend too. Talk to you later.
Ted Seifried with Zaner Ag Hedge, our guest today here on Market Talk, brought to you by Growmark FS. Find us online, markettalkag.com. This has been the Friday, July 30th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.